We also have a new FOMC chairman, Kevin Warsh, who is taking a look at the economy. This week he's going to be, or he is speaking in front of Congress. A lot of questions about what he'll do with the markets, what he'll do with interest rates, and what that in turn means for the market. To that point, Apple brought a lawsuit against OpenAI just last Friday night, just last week, and basically accused OpenAI of trying to steal trade secrets.
I would say most companies would love to try to steal trade secrets. They wouldn't love getting caught. But if you really could dig deep into the hearts of managers, they'd like to steal secrets. Wall Street thrives on the idea that convincing you that if you just listen to them, they've got something that nobody else has, well, which can't be true. I mean, it's ridiculous, and it's a very simple business, as long as you keep remembering that it's simple and that making it complicated it's just crazy. At that point, you're gambling.
But do you still like Apple?
People's enthusiasm for gambling is enormous.
Warren, how are you feeling today?
Well, I broke a leg.
What happened? The first that I can think of is the massive position that Berkshire has developed and grown in Alphabet, in Google shares. That's something that a lot of people have looked at and said, okay, this is Greg's mark on how he's going to be changing the portfolio. How did the Alphabet position come along?
I initiated it. I mean, I normally wouldn't give you an answer on something like that, but I will, because I am not doing anything that he doesn't approve of. He's not doing anything I don't approve of. We talk all the time. Well, every day. I mean, he is the decider. And getting back to Alphabet or Google, it's probably number 5 or 6.
Well, I thought it was number 3 if you consider the $10 billion private placement that would go along with that, because that would put it north of $31 billion.
Yeah, but we've got the Burlington Northern Railroad, which is certainly worth far more money than that.
Okay, so you're counting fully owned companies as well.
You know, I mean, we are always making the choice between whether we'll buy marketable securities or the company. We look at them the same way. There are some minor exceptions to that. We can't set dividend policy, for example, if we don't own it. But the chances of those being material, the important thing is to buy a good business and to buy it on the right terms and to get a right person to run it.
Okay, but you've quickly grown a north of $30 billion investment in Alphabet. That puts it, in terms of those companies that you own pieces of, behind only Apple and
American
Express. So Coca-Cola would be smaller, Bank of America would be smaller?
It's kind of close. But if you take Coca-Cola, which we've owned, 45 years, whatever it may be, we don't have a thing to do with running that business, but it's a very good business. And when I say a very good business, I mean something that you can expect to earn high returns on capital over a long period of time. Now the question is, when you get into Google, or any of the AI companies, you're putting out huge amounts of money, and I can put huge amounts of money into government bonds and get, 20 or 30 or 40 billion dollars a year in terms of payments from them. So a good business is one that earns a lot more than and has prospects of continuing to earn a lot more than the returns on essentially riskless investments, which you could define as treasuries. But if you take something like American Express, most of the banks earn 13, 14% on capital. If I asked everybody to guess what American Express would, they would come up with some figure similar, but it's so different that it earns 30% plus on capital, and it does not incur more risk in doing so than the banks that earn 13 or 14%. And that the trick in life is to find, in investing, is to find businesses that are going to earn high returns on capital for an extended period of time. And that's what happened with Berkshire for a long period of time. A long period of time gets to be very important because those doubles later on are very big numbers. But Charlie Munger, my partner for decades, he just pounded the idea that it wasn't a good business just because it was doing sexy things or whatever it might be, but if it wasn't earning real cash, that it would or be expected to do it in a very short period of time, and just be able to distribute it if it wanted to. Better yet, if it could reemploy it as a business, it was even better than one that had the ability to earn high returns, but you couldn't deploy the excess capital of those returns.
Okay, let me ask you though. Forever, people have thought of you as somebody who doesn't invest in technology. And by the way, you've described yourself as somebody who doesn't invest in technology. Obviously, the biggest position in the Berkshire portfolio is Apple, a position that you put on, but at the time you called that a consumer company. Google, you just called an AI company. So what happened?
Google, the real question with Google and all of its competitors now, because they're all laying out hundreds of billions. They're
big capex spenders.
So yeah, and that's real money. That's if our railroad were to lay out 300 million or billion or 200 billion, that kind of money wasn't even put in the railroad business, in terms of developing it. So, and that's the game they're playing now. They weren't playing that game with computer software.
No, so when they were asset light, you didn't like them, and the markets loved them. Now that they are
I made a mistake.
Spending heavily on capex, a lot of shareholders don't like them as much because
I think they're more likely to be a winner based on the record than probably 90% or 95% of what gets merchandised through Wall Street, because Wall Street is interested in whether they can sell something. And I can't recall a report on Wall Street that really gets into the internal rates of return that a business is actually earning. What's more important than what a business is earning? But they ask all these questions about what will happen next quarter, it's ridiculous. But investing is coming up with, probably this close to the most successful long-term investor was Rockefeller, but look at what oil and gas has done over 150 or a couple of hundred years. So he kept compounding at a very good rate, not as good a rate as Geico would have achieved in his early years, because it's easier to do when you're small. Getting to do it when you're large is, you got the whole world looking at you, trying to figure out, how come those guys are doing it, we're not doing it.
Why do you like Alphabet above all others, and what made you initiate this position? What was the eureka moment?
I would say that I don't like it as well as at least 4 or 5 other businesses that we own.
Other than Apple, the railroad?
Well,
American Express.
You're not going to get the whole portfolio out of me, but and of course,
but you like it enough to make it a huge position.
I like Berkshire that way.
Yeah.
Berkshire earned high returns on capital without. I'm not talking about using the tricks of leverage or that sort of thing. I'm talking about.
But I'm talking about why Alphabet versus the other Magnificent Seven or the other hyperscalers who are doing the same thing, spending a lot of money, Amazon, Microsoft, whoever it may be, to try and win in this position of AI.
Yeah. Well, I don't want to sit around knocking the others. They don't have any choice.
Yeah.
You know,
To spend like this, you mean?
They're now playing a game in many cases or in some cases, where they're playing a game they don't want to play. IBM would have loved it if they just kept playing the game that IBM was playing in the 30s or the 40s or the 50s or the 60s, you know, and then somebody came along and said, we'll get a better result for you, achieving the objective of all the customers you have, because that's all you're going to have is you either have happy customers, you don't have customers over time. And the customer's not dumb. Wall Street can be very dumb, and in terms of they can dream. But a guy with a grocery store can't dream. I mean, I worked at my grandfather's grocery store, and we saw, we had one store in 1869, and we had one store in 1969. And other people were earning high returns on capital, some on a national scale. A&P, which people don't associate with anymore. In the 1930s, I mean, they were number one, enemy number one of trustbusters in Washington, and they had a very, very, very good hand, and that hand disappeared.
So it's a different game, and you like this game, you understand this game more than you understood the game they were playing before. Is that fair to
well,
say?
there's all kinds of games I don't understand. Sure.
Yeah. But this game.
Why should I expect to make money in all kinds of things I don't understand? Mm-hmm.
But that's what I'm getting at. What do you understand about this game at this point? Because most people would say he's never going to buy any technology stocks, and I think you've said the same thing yourself in the past.
Yeah, but I've done it. And actually, one of the most successful companies I was associated with, going back to 1958, we started a company called Data Documents.
Right.
We started Data Documents because a couple pals of mine read in the paper that IBM had settled an antitrust suit by divesting. They had to divest 50% of the capacity of what was their best business. And everybody knew it was their best business. Now, it so happens it ran out after 10 or 15 years, and I knew some of the people that caused it to run out. But if you have a wonderful business, you are going to be subject to attack. So it's not a question of whether it was wonderful yesterday. It's the question is how long is it going to be wonderful?
But that's what I think I love. People can try and pigeonhole you and say they know who you are and what you do. To me, it looks like you're 95, turning 96 next month, and you are still changing and following the game.
Yeah, but it's easier for me. If somebody came along, I'm just trying to think of what about beef, better candy. That would have more predictive value to me than if they came along and had a better way of doing something that 100 of their competitors would sneak in the plant at night to see exactly how they got it all done.
Let's talk about your largest position, Apple. You told us that you were thrilled with everything that Tim Cook had done. I don't know how well you know John Turnus at this point or what you think of the company's doing. You still have a lot of faith in Apple?
Well, there was no move they could make that would replace Tim that I would have liked. I mean, if you got somebody, Stradivarius playing the violin for you, I mean, don't spend the next 300 years looking for another one. I mean, you've got one already, and of course, Wall Street thrives on the idea that convincing you that if you just listen to them, they've got something that nobody else has. Well, which can't be true. I mean, it's ridiculous, but it works because, well, in general, it works because America has been a wonderful place to invest money, and the Dow Industrials, when I bought my first stock, had just crossed 100, and now it's 52,000 or something, and you've got dividends in between and all kinds. Well, I mean, the village idiot could have made it from that point forward.
Yeah.
And so I've been in the right game. If I'd been in wheat speculation, I mean, wheat's gone from, you know, I don't know whether it's gone from $3 to $5 or something over 200 years. And it's a very simple business, as long as you keep remembering that it's simple and that making it complicated it's just crazy. At that point, you're gambling.
But do you still like Apple?
People's enthusiasm for gambling is enormous.
You've talked about that over the last many years, probably since COVID. But you still like Apple. Back to the point.
Yeah.
Yeah.
Yeah. And I know more about Apple than I knew many years ago. But on the other hand, if you're Apple, you've got very, very smart people all over the world shooting and trying to figure out how to make sure that Apple's future, the future, is as bright as it is in the past. And look at the car companies. I mean, Henry Ford owned the car business for 20 or 25 years, and he brutally integrated like you cannot believe it. He drove costs down. He got the cost of Model T down, I think, to $285. And he always was decreasing prices while increasing wages.
Right.
So but he also was a little nuts in some ways, and that did him in. Finally, when he converted over to the Model A, and General Motors just came racing by, and my friend Charlie Munger thought that General Motors was going to be the dominant company. Who could imagine attacking their dealer fleet and everything they had going for them? And you know, you've always got somebody shooting at you.
And to that point, Apple brought a lawsuit against OpenAI just last week, and basically accused OpenAI of trying to steal trade secrets.
I would say most companies would love to try to steal trade secrets. They wouldn't love getting caught. But if you really could dig deep into the hearts of managers, they'd like to steal secrets. Wouldn't you? I mean, if you had a business and you were struggling along, and the guy next door was making money, I had a half interest in a Sinclair filling station at 30th and Reddick in Omaha when I was in my early 20s, and I'd been to business school and knew all these things. And the guy next door had the Phillips station, and he was pumping 30,000 gallons a month, and we were pumping 15,000 gallons a month. So I said, we're going to wipe this guy off the face of the earth. And, you know, a couple of years later, we were selling 15,000, and he was selling 30,000, and we gave up, and we closed up, and I think he's still operating. It's people are playing for keeps in business.
Yeah. We talked about Coca-Cola briefly, the longtime position you've held for more than 45 years. There is a major lawsuit with the government that could look at action, I believe, going all the way back to 1996 with Coca-Cola. The government, the IRS, has said that they owe them $20 billion, roughly.
Billion, of which they paid.
I think they put $10 billion or something.
Close to $10 billion.
Right. But we're going to hear about whether the activities, and this has to do with overseas, their overseas business, just some of the accounting that goes back and forth. Coca-Cola says that they thought they had an agreement in 1996 that stood with how they should behave. The government's now looking for more money and saying that's not the case. It's not just Coca-Cola that's riding on this. So there's a lot of other American businesses who are doing the same thing.
Oh, well, a huge number, which is why the derivative effects of this suit could be the biggest in American history.
What do you think of this? And with the understanding that you are a Coca-Cola shareholder, a large Coca-Cola shareholder, was this an overzealous government looking for ways to raise more money? Was this a company that performed badly, or that behaved badly?
I've got a dog in that fight, so
yeah. So you don't want
to. No, that's why we have courts.
Yeah. So you'll wait and see what happens with it. But I take it you're watching this closely.
Yeah. Paying the extra money won't break Coca-Cola any more than anything I can think of would break Berkshire. I mean, I look at, all I do is think about the downside. The upside will take care of itself.
Right. We also have a new FOMC chairman, Kevin Warsh, who is taking a look at the economy. This week he is speaking in front of Congress. A lot of questions about what he'll do with the markets, what he'll do with interest rates, and what that in turn means for the markets. You in the past have spoken about how interest rates are gravity, and it determines where stock market prices are headed.
Right.
So what do you think happens? What are you betting?
I don't know what he'll do, but I would say that that job is so complicated. I think the other day he was quoted as saying, that they have 950 economists when they could use about 10. I admire him for taking on the job. I think he will do the best he can at achieving the job he was assigned to do, which is, 2% inflation and while maintaining maximum employment. And my guess is that just like some of the others that have preceded him, not all of them, but he would read that every morning. The
dual mandate of the Fed.
The dual mandate, yeah. And he doesn't. He knows he can't be perfect at it, and just like I know I couldn't be perfect at taking people's money and earning super returns on it. Mm-hmm. But my guess is that people were right in realizing that I cared about what happened to their money. Mm-hmm. And I would say that Warsh he cares about the country. Okay. And I think that's been true of a good many. It doesn't mean their decisions are always great, but because sometimes the decisions are so tough. I mean, imagine Paul Volcker getting, death threats all the time, and others just think they know more than they do.
But you think Kevin knows a lot and is a...
I think he's I think he was a good choice.
Okay.
Which probably means the president will be mad. Future presidents will be mad at him because future presidents are looking at the next election, and he's not supposed to be looking at the next election.
Right. You obviously don't come out and make calls on where the market's headed at any point in time, but you do make calls on market behavior and what makes sense to you and what doesn't. Do you think the markets make sense to you when there's so much riding on AI? Earnings have been very strong. The consumer looks like it's held into this point, but how do you view it?
Well, I think there are times when opportunities are just thrown at you so fast you can't, it's unbelievable. And then there's other times when you're very, very lucky if you find one thing in a couple of years. And it should always be that the latter is what prevails. But since humans love to gamble so much, there's more money in actually cultivating gamblers than there are cultivating investors. If somebody bought Berkshire 40 years, 50 years ago, a guy would have made one commission. and he should spend the rest of his time telling the client, don't do anything with it. And that's just not the way. We can't expect that of humans. But every now and then you do find people you find people who behave far better than other people.
Fair to say, though, it's tougher to find values or find
it's
cheap
tough
opportunities?
To find values when everybody is preferring gambling. Yeah. And from the standpoint of the state, we may have discussed this, but from the standpoint of the state, it's sort of disgusting because the state needs money for all kinds of things, roads, schools, you name it. And they have found that they can clip people who are buying nothing but hope, selling them something with a payout ratio of 60% or something like that. And if they weren't doing that, they'd have to have the income tax higher. Right. It's a cynical sort of activity, and I think the less you get cynicism between the governing body and the people of government, you don't want people to be cynical about their system. But there's times when the system says, just be as cynical as you want because this is what I'm going to do, baby.
Let's go back very quickly. You touched on this. Part of the reason that you want the shares given out over the next 8 years is because you want your kids making these decisions. But the other part is that you don't feel like you necessarily have to hold on to these voting shares of Berkshire for as long because you have faith in Greg.
Yeah, exactly. And if we didn't have faith, well, part of the reason I'm around is because we didn't have sufficient faith in anybody. And we know all kinds of people, but I mean, if you were talking about Tom Murphy, I mean, if I could have hired Tom Murphy, but the trouble was they were all older. And all my friends were pretty much older, so I didn't, it wasn't like I was in college and I could see who really had it, and, you know, who was writing crib sheets on their answers on their shoulder, on their shirt cuffs.
But you feel that way with Greg.
I feel 100% that way.
Yeah.
Yeah. I've seen him in a lot of situations. A lot of situations. I felt that way with Charlie. I felt that way with Tom Murphy. And, you know, I mean, but you know, nobody expects you to pick out, you know, 25 husbands and have them all work out. I mean, yeah, and just finding one is pretty tough. I mean, that's the right sort.
Yeah.
And then you make mistakes.
Warren, how are you feeling today?
Well, I broke a leg.
What happened?
A few weeks ago, so, which is really, you know, I've been very lucky on that sort of thing. I haven't broken a leg in my life until now, but I feel good. I'm glad I was born.
Yeah.
And I'm glad I wasn't born in some other country, and I was glad initially that I wasn't born female, and I mean, all kinds of things. I mean, I really won the lottery when I came out, and other people think they won the lottery if they've got a trust fund set up for them that takes care of them for their whole life and, you know, 5 generations thereafter, but I just wasn't raised that way, and I think it's a good thing I wasn't, and I haven't raised the kids that way, or more important, Susie didn't raise them that way.
Great. Well, I want to thank you for your time today.
Well, thank you.
I appreciate it.
And we're in an interesting business.
Yeah. Thank you.